Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of NIO, ticker symbol NIO. And so here I am recording this on Wednesday, October 30th during market hours, and NIO is currently trading right around $5.37, being down about 4.20% on the day. And yeah, so I wanted to follow up on last week's video because, I was talking about this potentially being a bottom, a possibility of coming down to around $4.50 before rallying up to what I could see as a pretty feasible target over the next 8 months, likely sooner, being $8 a share. And so we did get a pretty big move up right after that video came out, hitting a high of $6.03 on October 28th. But following that, we got a pullback of about 3.6% on the 29th, which was yesterday. And so far today, we are down, like I said, gapping down from yesterday. And so, my thesis is still there. I still think that we're going up to $8 a share. But there are a few things that, I think is important to remind ourselves when looking at charts like this. It's good to buy dips. It's not good to buy rips. And, it's good to take risk off the table when it does go up. And it's good to consider dips like this, pullbacks like this, as opportunities if it is respecting support. And so, I got a lot of great comments on that last video, but a lot of comments suggesting that people have been experiencing a lot of pain with NIO, as if we do take a big step back, we can see that, it's just been bleeding for a very, very long time. And so one might look at this and say, oh, it's come down from, $27 a share. It's a trash stock. Or one could view this as an opportunity if it is respecting levels. And so, really the big opportunity was earlier this year in April when price was around $3.61. That was the all-time low, if not, 52-week low. And so that was a great opportunity. And that was on a dip, lots of fear then. And, so buying should not be exciting. Buying up here, that's exciting. But then you feel a lot of pain after that. Buying should be, here when there's a lot of doubt, there's, a lot of concern that it might keep going lower. And then from there, it rallies over 100%. And, so that is, the good way to be looking at this. And so buying up here, buying around $6 a share, it's exciting, but then it's followed by a pullback. And so I think what we're seeing now is a dip buying opportunity. I might be wrong, but I might be right about it coming down to 450. So, I think that is good to have that in the plan. But I think it's good to be considering levels that it might be holding as support. And so one of them, I was expecting it to be holding around $5.50, corresponding with that purple downtrend, which is based on these two pivot points over here, going back to the pivot high from February 16th. But we're below that. We've gapped below that. So where might we be finding some support? I could see the 618 here from this Fibonacci retracement potentially acting as support. That's around $5.20. It does seem to correspond with this consolidation that we recently had. So maybe price does dip down, maybe 10 to 15 cents lower than it currently is. And that might be the new floor before the next leg up, maybe to test this gray downtrend or the $7 level here. So, I could see that as definitely happening. And so I view this as potentially coming down to around $5.25. And then let's evaluate it there. See, it doesn't look like it's respecting that level. Does it look like it's holding? And that might be a great dip buy. But, even just looking at the candles from the past couple days, this is a great dip buy relative to it being up at $6 a share. So, I think it's really good to be patient, good to be waiting for these things to carry out. And whenever we do have big upside moves, so from the open from, a few days ago, that's about 15% move to the upside over these two trading days, so Thursday and Friday from last week. I think it's healthy to see a little bit of a cool off. Otherwise, we see a big move to the upside and then we get a big rejection. This is a little cool off. And so I think right around $5.25, right around where that cursor is, corresponding with the tops over here, the tops of those candles. That could definitely be some notable support. And another level that we could consider that I don't have drawn up here is by drawing a trend line based on the low from August 28th, which was at a price of, let's see, $3.68. So right there, and then connecting that to the let's see, the low over here, that was at a price of $4.96. And so we have that trend line there, and that does seem to correspond pretty nicely with that 618 at right around $5.19, or let's say between $5.15 up to $5.25. That could be a great dip buy before the next leg up. You know, it's sustainable when these things happen by taking steps up. It's not sustainable when they really launch because then they pull back a lot. And so, you know, I don't necessarily think we're coming back to $4.50. I think that might be kind of in the greedy territory of, you know, waiting to get the best possible price. I think it is good to have a plan for if we do come back to $4.50, as that does seem to correspond with a lot of this consolidation over here. It could be very, very strong support if we do pull down to that level. But maybe we don't. I think it's bad to be waiting, being stubborn, and then missing a great opportunity with this going up to $8 a share. And so, you know, I think that right around current price, this is the time to be dip buying, not up here, not up at 7, and definitely not up at 8. And so, you know, I think that right around current price, maybe a little bit more between really the range of $5 up to $5.25, and then definitely at $4.50. If it comes down to that level, I will be so excited. And so I think it's good to have that kind of mindset. If it does go lower, you want to be happy. If it doesn't go lower, you'll want to be prepared. And so I think today is a day to be prepared for the next leg up. But who knows? You know, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, you guys. Take care.